Hi guys, it's Travis from Rebirth Holdings. First things first, please do press that like button, subscribe button, and turn on push notifications so when the latest update drops from myself on YouTube, you get it there first. Now, moving straight into some charts, we do some technical analysis today. Again, a currency pair that we haven't done on this channel before is the Aussie dollar against the Japanese yen. So, as I like to say, always keep your charts clean. All I have on there is my weekly and monthly key levels. Again, if you want to know why and how I place my weekly key levels in the positions they are at the minute, please do get in touch with me as I can provide you with our Rebirth Holdings manual guide and our online videos where you are able to learn how to do these. Now, starting with the key levels, guys, I'm going to talk about the weekly resistance at 69.245, just because that's probably the next key level that's going to impact my trading decision, because we're more or less, I'd say, about 50, 60 pips away from it. So I'm just going to highlight this key level with a dynamic area of resistance. Again, I like to do these in turquoise. So again, you've all got your own different ways of how you do these, but I do it in this method here. So as you can see, on the weekly resistance at 69.245, we've had, again, a rejection there, price fell down, had another rejection there, price fell down, and it looks like we're coming towards this resistance again. So this is looking like a third touch of a resistance. Now, when we do tend to get 3 touches on a resistance, we either tend to get a strong rejection and a bounce off it, or a clear breakthrough to a next resistance zone. So I'm just going to be monitoring that and I'm going to look at other elements to see what could potentially tell me if it's going to bounce or break off this resistance zone. So before I go into that, guys, I also want to include some other confluences onto this chart before making any decisions. So I want to kind of create a trend line from a higher time frame, a daily or weekly. And I'm just going to place a descending trend line across the top to show that we're currently in a downwards trend. So we've had to make, obviously, trend line 2 touches of a trend, which is the downwards trend. So point A, point B, and then you extend the trend line off. And again, my dailies and weekly trend lines like to do in either grey or pink. So that's just for my relevance. Now, as you can see, what else do I need to put on there before I potentially look to lower time frames? Okay, now that you can see that I've done a daily descending trend line, it kind of shows the overall trend at the minute being bearish. I'm going to step down to some lower time frames to see if there's any more channels and trend lines that I can implement to kind of give me a bias decision on where this chart's heading. So as you can see here, we've kind of had, you could call it consolidations. Price hasn't really had a serious uptrend momentum or a serious downwards momentum. Kind of float within this range here. Now, regardless though, you can still put in trend lines here. So if I just place these in, I can discuss with you why I've done this in a moment. Okay, what I can see now is swing high to the next swing high. We've had a swing high to a swing low to the next swing high. 2 points, extend off the trend line, and then again, swing low to the next swing low, point A, point B, point A, point B, extend your lines off. So as you can see, we've got a consolidation channel. Well, as you can see on the third touch, we've kind of had a break of this daily 4-hour trend line, I should say, and we've had a retest of the trend line here. Now, this is also known as a flagpole pennant, which is also a good indication to potentially saying price can continue to go up. But before I get into any decision making in regards to where this trade is going, I want to kind of look at other confluences that I could potentially put on this chart before making my decision. So go back to the top. Let's go back to the dailies and the weekly resistance levels. So I'm going to start on the weeklies again. I know that I could potentially use a Fibonacci on this chart as well to show the overall trend direction. So as you know, you draw your Fibonacci from top to bottom, and you want to see if the chart's pulled back to any of these resistance zones. Obviously, they have significances in these levels. Now, before I go back down to the daily, I am just going to place a horizontal ray on the 61.8% Fibonacci, just because when you get to lower time frames and you've got all of these different Fibonacci's on your screen, it can get a bit messy. So I'm just trying to be accurate here. There we go. It can get messy. So all I'm going to do is, right, let me go back down to the daily Fibonacci and the daily time frame. It's really important to be accurate on these guys. Cool. And then all I'm going to do now is get rid of this Fibonacci. But I've clearly still got this horizontal ray, which indicates to me it is the 51.8% Fibonacci retracement zone. Okay. So this is a key level for me to potentially look at once the price gets to this level. It could also be an exit indication for a trade if I do take a trade long. Now, what you can see here, guys, is I'm using a weekly Fibonacci, but I also want to see if there's any Fibonacci retracement zones on any lower time frames. As we know, the trade is currently in a retracement of an overall downtrend, so we can also try to find Fibonacci retracement areas to potentially see if there's any executions to the upside whilst being in a bearish time frame. Because again, looking at retracement areas on the higher time frame doesn't mean that there's not any opportunities to get into the market on lower time frames. So all I'm going to do is use a Fibonacci retracement tool from the top to the bottom. So from the bottom to the top of the latest swing low to swing high. And it shows us that price is floating around the 38.2% Fibonacci retracement zone. Now, as you can see, price is currently rejecting the 38.2% retracement zone, which also usually gives us an indication that price is going to continue to push to the upside to usually the minus 61%. Now, there's a few things that we need to take into consideration if price is going to hit this level. But as I said, before we make any decisions, I'm just going to keep building up the confluences on this chart. As you can see, candlesticks the past 3 days have been bullish. So far it's looking good that price could continue moving upwards. Now again, guys, I am literally just going to, on the 38.2%, I'm just going to draw a horizontal ray, label this up. So just in case I do get rid of this Fibonacci zone, I still remember that this is a significant level for this chart, and I will then remove this Fibonacci zone for the meantime, so my charts are still clean. So what you can see here, guys, as well, is this also creates another daily key level. So on this zone here, you can see that price got to these levels and rejected, and in the past it tried to push up but got rejected at that level as well. So it also creates another daily key level. So from here, now that I'm looking for more key levels, let me step out to the week and see if there's any more key levels that we can put in that's not the traditional weekly and monthly key levels. Looking back here, you can see that price had a massive spike down. We could potentially see if that was a key level for any particular reason moving forward. I'm just going to leave that there. So I think I've covered all key levels on this chart. Now that we've looked at key levels, trend lines, Fibonacci retracement zones, you can potentially also look at moving averages. Now, the more things you can look at, guys, the more confidence to potentially taking a trade in a certain direction. So the EMA at the minute, price is currently riding above it on the daily time frame. And let's have a look on the 4-hour time frame. Perfect. Price is also riding above the blue EMA. Again, another strong signal to move potentially to the upside. Now, I'm going to potentially now look at taking a trade in a certain direction. Now, what would my thought process be looking from, let's just start from the daily time frame. As I am an intraday trader, I will be looking at this daily, so it's a good indication to me. Now that I've got a full chart set up, I want to be looking at how I could potentially look to place a trade. Now, looking at candlesticks, I've had a nice daily hammer, 3 consecutive bullish days. From just looking at candlesticks, it shows me that price can potentially continue to move forward, but how far? Okay, now also something to take into consideration, guys, is as we know, price is kind of moving in a consolidation range. That could potentially be due down to this inside bar. So this is also a mother candle. So this shows consolidation. So price works in between this candle. So price at the minute can't break above or below this candle. But using candlesticks, I would like to see an entry on this price above or below when this candle is broken above or below. Okay, so that's not a strong enough indication to me to say that this is going to go in a certain direction just using candlesticks. Now, let's look at if I can use potentially trend lines in regards to giving me a price execution. Now, stepping down to the 4-hour time frame again, guys, we created this channel. So let me just remove this. Perfect. So this channel created a flagpole pennant. When we see a trend line break and a retest of it, it gives us a good indication to price moving in a certain direction. Now, when we see a flagpole pennant break to the upside, it does tell us that price will potentially continue to the upside. In regards to a target zone, the way that we measure a target zone for flagpole pennant as well is taking the first swing high to the first swing low in regards to the length. So from here, as you can see on the 1 point on the screen, this level matches up with this level. That's the height of the channel. I would then, from the breakout point, kind of give me an indication of where my first target would be, just simply using the flagpole pennant rule. Now, and also, let me keep that on the screen actually. And also another reason or another confluence potentially showing me that this price could be moving upwards is, let's go back to the daily Fibonacci that we put in. So again, this was the 32.8, but it also gave us target zones as well. So what I'm going to do is put that Fibonacci back on here. Now what we can also see is potentially from the Fibonacci retracement, because we've had the rejection of the 38.2, we could now start to see price push upwards. Now traditionally we'd be looking for this price zone here as a target zone, but there's something telling me that price potentially may not reach this far just yet, because we've got a couple of areas of resistance to meet first. So what you want to be taking into consideration is this 61.8 as a resistance zone, the weekly resistance. Also, we've got the first target of the -27, and you've also got that daily, that weekly key level that we put on a couple moments ago. If I zoom out to the weekly, due to that spike there, these are all key levels that the price would need to reach and again possibly retest before breaking above. So using Fibonacci, I know that a potential first target will be -27. Why? Because it matches up with a weekly resistance that we've just plotted on there, and also it also matches up with a trend line touch. So as you can see, we've got the descending trend line touch of a weekly. Again, the higher the key level, the higher the trend line in regards to the time frame, the more significance it has. So we could see price halt at around this level of 7045. Now, that would be a great exit point of a trade because we've got lots of resistance up in this area. Okay, perfect. So all I'm going to do now is talk you through my next few trades on this Aussie dollar against the Japanese yen using what I've just showed you. So in regards to entries, how would I be taking an entry on this? Again, this could move pretty quickly. The reason why I say that is because we've got a lot of fundamentals coming out Sunday night for us in the UK. So again, the Japanese yen is included in this currency pair, and we've got the Bank of Japan interest rate decision coming out, as well as unemployment figures. Again, a lot of negative news for the yen. This could add a lot of manipulation, a lot of volatility, a lot of volume to this market. So this could start to pump as early as Sunday night. Again, something for you guys to take into consideration. So what I would potentially be looking for here, guys, is when the market opens, I'm hoping for some slight retracement to these zones here. Again, it's all about getting the perfect entry. So bear with me. I'll be looking for an entry around this level here. I'll be looking for price to pump up to here. See if it closes above it. Retest it as a previous ceiling. Now retest it to the floor, and continue to see price shoot up into this area here. So this here for me is target one of a zone. And in regards to pip value, I would potentially be looking for around 200 pips as a target zone here. So in regards to stop loss, guys, you want to be placing this below the last swing low. So that's that one there. If you want to be a bit more conservative, due to the news coming out, you might want to put it below the next swing low, which is here. So again, you've still got a good 2.5 to 1 risk reward ratio if you're doing it there. Or again, you could do it there and have a good 5.2 to 1 risk reward ratio there. Again, you can always bring it all the way back down to underneath the 61.8% Fibonacci, underneath this swing low here. Again, you still have a good 1.6 to 1 ratio. So again, depending on how aggressive you want to go in this chart, this is a current setup position here, and perfect. That would be my first entry exit point there. Now, from when this trade takes place and when this trade is executed, and potentially if this trade is successful, where's my next trend direction, or what's my next bias from there? So what I'll be looking for moving forward from there is potentially some sideways movement again within this range, and looking for some daily candlestick closures to potentially show that we are looking potentially to continue the downwards trend. Against the third trend line touch, so I'll be looking for a potential bounce. It is on a nice 61.8 retracement zone, which is also a golden ratio number again for us to be potentially selling a market. So again, this could go into the next week. We could see the rest of the week move sideways. But if this pair wants to continue moving at serious momentum, it could then turn face towards the end of the week, back down to these levels of 60.05. Now, again, another confluence that could potentially show us that we may, if not more than likely, see the price move up to these zones here is the three drive exhaustion. So you have the first drive to the upside, and you have the retracement. You've got the second drive to the upside, and you have the retracement. I'm looking for that third drive to the upside. And then what tends to happen after three drives, you have a bit of slowdown, a bit of consolidation, and then you have that exhaustion sell, okay? Exhaustion sell, heavy bearish momentum, which also brings me back to the targets I was discussing of 60.05. Okay, there's a lot to take in, guys. If you do have any questions about this, please do let me know. Again, myself, Travis, you can find me on Instagram. You can message me on YouTube. Any questions, please do let me know. Guys, enjoy the rest of your weekend. Trade safe. Stay safe. I'll see you next time.